Welcome out to another Trading Justice podcast. This is going to be one of those podcasts. I've done a lot of podcasts with my brother, and there's a few over the years that I've referenced several times. I think this is going to be one of them where I reference to something Matt says that I'm going to reference 6 months from now, 12 months from now, 2 years, 5 years, 10 years from now. And based on conversations I've had with my brother over the last few days, I feel like that's how it's going to be. And speaking of my brother, he's going to be teaching a fantastic class coming up here next week, 1 week from today, recording this on a Monday, 2-day technical event, Master Trader. It's going to dive deep into the world of technical analysis. In the conversations about the labor market with my brother, I was like, what's one of your big takeaways? He's like, people need to learn how to trade. And I'm going to pick your brain more on that here in a few minutes. But tell me about how you doing, man. Tell me more about Master Trader.
Yeah, I doubt I'm going to go into too much detail on that comment. We'll talk about it later on today. No, Master Trader, our September edition of Master Trader for the pros is coming out next Monday and Tuesday. And typically on day one we talk all things technical analysis. Day two we get into some basic options. I'm going deep diving this coming week. If you are interested in learning about technical analysis, I'm doing 2 days on technical analysis. Monday's going to be basics, trends, pattern, support, resistance, candlesticks. Day two, I'm going to get into indicators, prep, set method, active trader, you name it. It's going to be absolutely fantastic. And so if you are new to the world of trading, or you need to learn how to really navigate the market from a technical perspective, or you just need a refresher, whatever the case might be, Master Trader is the foundational course of tackle trading. It sets the standard for everything else. It's free for all of our pro members every single month. You can attend once, twice, thrice until you get everything you need. You can attend. There's no end date to that. So if you're not a pro member, the only thing you got to do is hit the link in the description below, sign up for a free, that's right, free 15-day trial, and you can get access to Master Trader next Monday and Tuesday. It is the best foundational starter course for in the market today. No doubt. You're going to have a tremendous amount of fun. You're going to learn a tremendous amount, and we're going to have a lot of fun starting next Monday and Tuesday.
Learning to trade and is something that is just not a pastime. It's not just profitable. It's an important skill set for anyone who invests their money, even if you don't trade short term. Understanding technical charts, man, it gives you a decisive advantage in making decisions regarding
I
your
don't know
portfolio.
how you would navigate the world of finance in the year of our Lord 25 without a technical ability.
Like
Could you
seriously, like
imagine being able
I,
to happen to navigate the world of the market from a fundamental or an economic perspective these days? Oh
no.
my goodness. Oh my
And
goodness.
you and I are two people who love to navigate things through the fundamental or economic, right?
Oh, I
But
love having a conversation. Don't want to make a trade on it.
yeah, absolutely. Listen, let's talk about some labor market, man. And I made reference that this is going to be a conversation that I reference, and this is based, coming into the podcast. Matt and I sometimes don't necessarily talk in depth about the subject matter. This is one of the ones I wanted to pick his brain on because, Matt, we had quite the week in labor market data. I mean, it was bad everywhere. You're highlighting Forex Factory right now. The numbers came in bad. Even some of the numbers that aren't shown on that screen right now, like Challenger Gray and Christmas,
The
basic,
context around labor was equally as bad as the raw numbers. Yes.
yeah, like reporting that planned hiring for August was the lowest level ever for an August. You had a Fed survey today that three people are less discouraged about finding a job in the next 3 months than at any point ever in the survey's history.
I think that 3 months is going to extend to 6 months, going to extend to a year, it's going to extend to 5 years. I think we're seeing the beginning of something, not the end of
Yeah, and I think that
something.
is an important point, and that's why we wanted to spend a few minutes at the start of the podcast on this, both to give context to current market action and then a reference point for the coming weeks, months, and even years. Matt, is that a lot of times we get economic data, and it's a blip, right? In fact, you and I are easy to dismiss. Oh, we got a PMI number here, we got an unemployment number here, but it didn't change anything, right? Last week felt different. It felt like it was the start of something, Matt. I got a million questions for you. I'm going to try to keep them in order. But Matt, as the data came out last week, what was your reaction to the data as it just kept on coming?
Worse, worse, worse. It got worse throughout the week. That jolts job openings data where first time you had a negative on job openings in the last 5 years. I think that set the stage for a really, really bad
Yeah,
week.
and what Matt is referring to is that there are fewer openings than unemployed workers for the first time since COVID.
And there's not a lot of analysis moving into the future that that's going to stop, Mark. Like that's a concern in and of itself. But then you went through the week and initial claims start bumping up, and initial claims at 237 versus 230, expectation versus 229 last. Like that's not too big of a concerning number in and of itself, right? We've seen 237. You really don't start entertaining a massive labor market problems till you start working into about 300,000 initial claims. But you know that the trend's going in the wrong direction, obviously, when you go from 229 over the last 5 months, right? You go from 216 up to 220, up to 225, down to 226, up to 235, down to 230, and now you come in at the 237 mark. So obviously the trend is going in the wrong direction. You certainly want to see that change. And so 237 initial claims itself is not a destructive number. But when you understand the context of both the environment in labor in general, but when you're also looking at the growing trend, you can kind of see where that data is heading into the future. And so on net, to me, that was the worst labor market print that we've had since early in the pandemic, when obviously we started seeing entire economic situations shut down. And although like I'm not too shocked personally by the data that came into the labor market, any pro member of tackle trading in the last couple months. I mean, I wrote 2 months ago in the newsletter that it was time to start alleviating the restrictive territory of the interest rate policy because labor is going to become more important than the inflation. And that wasn't me saying I'm not concerned about inflation. I am absolutely concerned about inflation. But if people don't, but for a lot of people that don't understand what's happening in the labor market, the things that are beginning now aren't going to change in the future. This to me, and I don't want to come across as overtly negative on the United States economic system, because this is one part of it, but it's an important part of it. To me, labor was going to start becoming more concerning than inflation. That does not mean inflation is not concerning. We are in stagflation right now. There's going to be times when you're more concerned about inflation. There's going to be times when you're more concerned about the labor side. But where labor is going, I knew there was a hiring freeze. I knew AI was becoming a more important and impactful impact on the labor side of the equation, not just from a trading side of the equation. But Mark, did you know 40% of CEOs out there right now expect to fire people because of automation?
I
Like
didn't know it was that high. No.
40%. 40% of CEOs expect layoffs because of AI. And so we're seeing the very beginning signs of what I would anticipate further down the road. In what is being unspoken here is that AI is having a net impact on the labor side of the equation. And so a couple months ago, I wrote that article regarding my expectations of interest rate policy, my expectations that labor is going to overtake inflation at the central bank, and that's what we've seen play out.
Yeah. And Matt, I know your takeaway here and I want to get to it, but I've read a lot of articles over the last 4 or 5 days.
Mhm.
Well, I guess it's felt 4 or 5 days. It's only, well, yeah, it's been 4 or 5 days since the negative data started coming in. But like as that negative data started coming in, I've read a lot because everyone tries to guess, well, why is the labor market so weak? We were seeing the numbers come in, right? And the numbers were strikingly bad. And whenever you have record lows or lowest in 5 years, it's going to get the analyst out there start talking about it quite a bit. And you had a lot of guesswork on why the labor market is so poor, why
Well,
the numbers are so poor.
there,
Well,
there's there's some specific causality here. regarding the answering of the why, right? At the end of the day, is knowing the why that important? Well, I think understanding the trend, where the data is going, how it's going to impact the market is equally important. But I think understanding the why is important.
I
Now,
think on this one, as we
I
get to
do
it, and
think
we'll talk
understanding
about it here in a
why.
second. I think
So,
understanding why
so
is
let me
really
ask you a
important.
question. We know the labor market environment is weakening. We know that this is a growing trend. We know that the central bank has flipped to have more concern on labor than inflation. Once again, that does not mean there's not concern on inflation. It just means where's the real concern right now, this very second. It's obviously on the labor side of the equation. Why do you think that it's that why do you think labor is now becoming an issue? Like, just off the top of your head, what and team, I want you to think about this too. What, off the top of your head, what would you say is the number one reason why corporations are not hiring? Because right now, Mark, this is not an issue of layoffs. That's the thing. This is
Mhm.
not an issue of mass layoffs. This is an issue of hiring freezes. That's one of the things we're seeing here, and one of the problems with the labor market is people can't find a job right now. It's not that we're seeing mass layoffs. That might come down the road a little bit, but I don't think corporations are lining up for mass layoffs here. I don't think corporations are lining up to say, "Oh my goodness, we're going to get a 10% unemployment rate here." That's not what I'm suggesting. The problem is the people aren't hiring. And so as people get out of the labor market, either through layoffs or just retirement or buyouts or whatever the case might be, those jobs are not being replaced. That's the issue. And so, why, in your estimation, based on the totality of the conversation that we've been having the last few months, why would you say is the number one reason CEOs state why they're not hiring?
I think the number one reason they state is a classic oldie but goodie and this came to my mind as the data was coming in last week, is
Mhm.
the general economic uncertainty, right?
Yeah.
I mean, when tariffs were launched several months ago, right, it set forth a chain of events,
Mhm.
and nobody really knew where that chain of events was heading, right? We're going to have tariffs, and then we're not going to have tariffs, and now we're going to tariff again, and there was a lot of uncertainty, right? As a CEO that plans 3, 6,
Environment's
9,
important when you're planning down the road. Yeah.
12 months ahead of time, right? Would be very easy to say, listen, whatever the real reason behind you're not hiring might be, to say, listen, we don't know what's going on. We're going to hold back, and how much of that is genuine and how much of that is calculated, I don't know. I think you have some stronger takes and some opinions on that I want to
Well,
get to. But
it,
that's what
it,
I would guess that would be the number one
it's not
stated
my
reason.
opinion, it's what CEOs state.
Yeah.
Okay. My opinion is very simple. All these other reasons are just what they say. It's not what's in the real plan. The real plan coming into 25, and it's going to be even worse in 26, and it's going to be even worse in 27, and it's going to be even worse in 29, and it's going to be even worse in 30, is corporations are not going to be hiring. They're going to allow, and I'm talking about the big corporations. They're going to allow employees to work out. They're going to allow employees to leave. They're going to allow employees to retire. They're going to allow employees to have buyouts, but they're not. I don't foresee massive layoffs coming. What I see is just the corporations not replacing labor. And that becomes a real nasty thing for what generations coming into the labor market. Not the people in the demographic of 45 to 65, not even the people in the demographic of 35 to 45, but it's people that are recent college graduates. It's people that are recent high school graduates. It's people that are just getting involved in the economic system. That's the demographic that is having a really difficult time finding stable work right now, given the fact that corporations aren't hiring. So this is like, is this a massive labor market shortage? No, this is a massive lack of demand for labor market in my estimation. So what CEOs say versus what's in their detailed plans at their corporate level can be two vastly different things. You're absolutely right, Mark. The number one reason CEOs state that they are not hiring right now is because of
It's
economic
just an oldie goodie. It's I've seen them use this
dark
excuse
clouds. Dark
a
clouds
million
on the
times.
horizon.
Yeah. Listen, we're just not sure. And whatever the reason, maybe they just want to make some more money. Maybe they want to like increase their overall, whatever the reason, they use the uncertainty as an excuse, as cover.
Okay. Inflation uncertainty. We've been living in inflation uncertainty for better part of 5 years. I would argue for the better part of like our entire lives. But they state that right now. Tariff uncertainty, consumer uncertainty. That's what a lot of these CEOs are stating right now. Number two, high interest rates. That's obviously having an impact. I would say the high interest rates are type of CEOs that are saying high interest rates right now are most likely on the side of smaller businesses, the Russell 2000 small businesses. They're obviously, interest rates are a little bit net negative for that. Over hiring is another stated concern by CEOs. There was a hiring boom coming out of the pandemic, obviously, and there's some analysis out there to suggest they went too far, too fast on that. And so some are saying there's an over hiring correction. Number four stated reason is AI adoption. To me, that's number one, Mark. To me, I thought this was the plan coming into this year. And so when you're
Okay. And that's the statement I want to key off of,
yeah,
because I think this is the important reference point for years and years and years to come. You stated just barely that this was the plan
I think it is.
coming into this year.
I think we are seeing the execution of the plan. I don't think
And,
anything that is happening right now is not planned. No, I think this is exactly what the plan was. I think we're seeing it come to fruition. And I think we're seeing a lot of CEOs do a little bit of this because they can blame the tariff and the economic uncertainty environment on the justification for their business lack of hiring when at the end of the day, 40% of these exact same CEOs, 42% of CEOs right now are saying tariffs and inflation and consumer spending and economic activity and economic uncertainty is to blame for their lack of hiring. Is that the truth? Or is it the truth that 40% of CEOs coming into 2025 were expecting to lay off in 25 due to AI? 40% of CEOs coming into this year were expecting to lay off based on AI. And so now what are we seeing? We're seeing lack of hiring. And what's happening? Mark, what demographic once again is struggling to find those new jobs? Well, it's all entry level jobs that are being taken through AI adoption, and I don't think those jobs are ever coming back. So that yeah, I think
well,
I think we're seeing the beginning of something.
Matt,
Absolutely.
if the
100%.
ramifications of this for an economic system are quite profound, if this is the beginning, because once again, it's easy to forget because it feels like we've been with AI for years. We're in the very early,
Oh,
like
AI is still a baby.
nanoseconds,
It's the
nanoseconds.
AI was just born. It's an infant. You're
You
carrying
know, like
an infant child right now. AI is not even a massive thing until we start embracing AGI, which is artificial general intelligence. But I,
and so if we are at, because I want to flesh out your thoughts on this because I think it is a critical point. If we are at the very beginnings of something,
mhm,
the revolution, revolution of the labor market, the transference of jobs from human to artificial
yeah,
intelligence, like, and if we're at the very beginning, that means that has several legs to go, which means this data that we're starting to see is not going to get better because
no,
politicians say we're bringing
no.
back
This ain't the
manufacturing jobs.
pandemic where the jobs were going to come back. No, no. This
Like,
they're not hiring entry level for a reason, Mark. And if they're not going to hire entry level, how do you ever get to middle management? How do you ever get to the director level? How do you ever get to the VP level? How do you ever get to the executive level if they're not going to hire at the entry level because of AI? This thing compounds down the road. This is the beginning of something. And in my estimation, like I said, 40% of CEOs coming into this year said they were going to do layoffs based on AI. Let me ask you a simple question, Mark. Does any CEO in America want to take the blame for layoffs?
No, of course not. It's
Okay.
not good
Does
PR.
any CEO want to go to their workforce and say, "Oh no, we're going to have a lot better profit margin when we don't have to
No,
hire"?
it's not good for
Okay.
corporate, and the thing,
Or
it's
is it
not even
just
about
as
public
simple as
facing. It's
is it
about
just as
corporate
simple?
culture.
You're right, but is it just as simple as if you're a CEO just saying, "Oh man, the economic uncertainty," like oh
Blame
man,
it on Trump. Blame it on Biden.
the
Blame it on
market's at an
Yellen.
all-time
Blame
high.
it on
Oh no,
Powell.
uncertainty. Corporations have more money than they've had at any point in human history. Oh no, we're just really, really nervous about the economic uncertainty at a 3% GDP handle. Oh, come on, get off that nonsense. And so even Mark, in 2010 through 2020, we grew at an average of 1.8% GDP. There wasn't a labor shortage, brother. There wasn't a hiring freeze at 1.8% average GDP for 10 straight years. And now I'm supposed to believe that based on tariff uncertainty coming into the market over the last month, that corporations haven't been hiring for a year? Like
Yeah,
it doesn't add up. To me, what we're seeing is the beginning of the AI revolution, and you're just seeing the very beginnings of it, and I fully expect this to compound. Even the IMF has a state says that 15 to 25% of all jobs will have disruption by 2027. Mark, what do you think that number is by 2030? Corporations are targeting 50 to 60% of labor reduction, increases profit margin, and you get there by not hiring. You don't have to fire people if people are going to leave the job over time. You just don't have to replace them. You don't have to if retirees are going to retire in that nice little VP cush job.
well,
Guess what? You
Matt.
don't need a director to go to VP to replace that.
Okay, I got a question for you in a thought, because and I want to move to the Fed and the market
Yeah.
related topics of this. All right, so hey, labor market problems. We all know the Fed playbook. Let's cut. Right, the Fed has had that playbook. It's a very simple playbook. We're going to get a cut in September. We might get two cuts in September. I've started to see more
Market's
speculation.
pricing in 50 basis points.
And so we could see a surprise, but we're certainly going to get cuts. And if the labor market continues to be weak, we're going to see more cuts. It's that simple. But my question for you, Matt, is, I think that's pretty straightforward, is what do classic economic models even mean, right? Because you cut to stimulate demand, to stimulate the economy. What if it's not related to that? If the cuts don't bring more jobs, they'll bring more profits to corporations, they'll bring more liquidity in the system, that might drive asset prices higher. But will it actually create new jobs? Cutting, in the classic model, it would say yes.
Will cutting 75 basis points over the next 3 months equate to corporations hiring more? Is that the ultimate
Yeah,
question? No.
yeah, yeah. That's what I worry about here.
It will have zero impact.
Yeah, because if you're right about your premise, and I have a feeling you
Are you kidding
are,
me? Corporation's going to take that as a gift.
yeah,
They're not gonna say, "Oh, now let's go hire again." Again, why are people getting why are they not hiring right now? Answer that question. It's not a firing problem. It's not a, "Oh my
it's not a
goodness,
profitability
okay.
problem.
It's not we just came through Q2 earnings, which had over 10% EPS growth, which was the fourth consecutive quarter. Corporate earnings are fantastic right now. So the corporate earnings landscape is fantastic. The labor market is starting to get a little bit nasty here. Is it really the economic uncertainty? Is it really market uncertainty? Or is this just the plan that has been laid out that is going to happen? And now we're simply seeing the early beginnings of it. And when you talk about the data problem in America, well, Mark, it makes a little bit of sense for the data to start not being as reliable, given the fact that the reasons. Well, let's put it like this: I don't know if our data collection methodology is designed to understand how AI is impacting
Of
labor.
course, it's not. Did
Right?
you see the recent Jackson Hole where they were talking labor? These people are clueless,
They
and
are.
this is my
They are.
worry. My worry is not from a corporate bottom line. I could, to be honest, like one of my initial thoughts is this is going to be bullish for a lot of corporations who are able to continue show great earnings. Now, certain corporations, if you are right on your premise and this is start of something, well, I don't know if I like Starbucks stock. It breaks the point. I want to do it better
I
because
don't like Starbucks.
like, certain consumer facing companies, are going to get hit. But a lot of corporations as a whole, right? They're not going to decrease production. But what I worry, Matt, is that the administration is not going to understand what's going on. The Fed is not going to understand what's going on, and they're going to try to spin it and use classic models.
Wait, so you're telling me the old dudes that run the government and the
It,
Fed are not going to understand how AI impacts a
yes, I think they're
20-year-old
going to
trying
be
to get a job right
painfully
now?
behind on this one.
Yeah, you want to talk about too late, Jay Powell? He's a little bit too late to the AI conversation since 3 months ago. He said AI was having zero impact on the labor force, when even the IMF is coming out and saying AI is going to have a 25% disruption by 27, which is only 18 months from now, Mark. And so is it that the government and the central bank are so utterly clueless on one of the most important conversations and topics in this generation that has in all of human history, AI. This is one of the most advanced technological conversations that is going to disrupt the entire economic system, that is going to replace upwards of 50 to 60% of the labor environment. And you're telling me those dudes don't have a clue? Or do they just not want to have the conversation with the public yet, Mark? Because
No,
what is the end conclusion of the public conversation? Is there a positive conclusion to,
no,
okay, or is this conversation very fearful for a lot of people?
of course it is.
Okay, so are they going to have the conversation through the lens of, yeah, we're going to lose jobs to AI and they're not going to be replaced, or are they going to have the conversation through a different lens? It's going to be through a different lens. To me, what we're seeing in the lack of hiring is based on AI. That's what we're seeing in entry level jobs. That's what we're seeing across the board. And so to me, like, I don't know how you could look at the labor market environment right now and see it through any other conclusion than disruption through AI. I see it through 100% because I feel it influences the decisions that every CEO in America is making right now. Yes, it's easy for a CEO to look at the environment and say tariffs. It's easy for a CEO to look at the environment and say, well, there's geopolitical uncertainty. All of that is bullshit and nonsense to me. You're once again talking about a market at an all-time high. Q3 earnings backdrop is absolutely fantastic from an actual earnings perspective. And so to me, it's like, no, you're not going to stop all hiring based on a tariff conversation that we're pretty much know where it is right now. Like, yeah, we kind
Well,
of have a pretty deep understanding what the environment is right now.
here
What uncertainty are they talking about?
I am going to go forward based because, based on conversations prior and in this podcast with you, I buy it 100%. I think you're dead on right on this one, like you've been on inflation and the petrodollar back in the day and lots of other things.
Right.
Matt, for me, my take on when I hear this, I'm like, okay,
We
this is
throw in
going
the
to
VIX
mean,
there too. The things Matt was right on.
yeah,
Like, yeah,
okay,
throw
what
those.
this means for me, because what this means for me, a lot of debt, a lot of liquidity put in the system. One, to cutting interest rates, spending, social welfare eventually, don't want to get into UBI today,
Listen, you can. I
but
will not put UBI into social welfare. There is a different. Those are two completely different conversations in my
but it
opinion.
means a lot of liquidity and a lot of debt. Uh, there's a reason gold's taking off. I think crypto is not that far behind, well, whatever the charts, but I think gold
Chart says
ever,
it's a distance behind right now.
well, yes,
Did you
right
know
now, but
pricing gold
Bitcoin,
Bitcoin's 18%
Bitcoin will
year to
have
date?
its moment too,
I'm
right?
just saying,
I
did
like,
you know Bitcoin is down 18% year to date if priced in gold and not dollars?
well, I know Bitcoin's had a few good years heading into that stat. So
Oh yeah.
it's same team,
You know what?
same team.
Hold on. Gold's had a few good years too, there,
Yeah,
brother.
listen, the anti-fiat plays play here.
They're both same team, same team.
Yeah,
You're right.
the
Same team,
anti-fiat
same
plays
team.
play here. I think you're seeing ever since Jackson Hole, gold sniffing out. There's things that are coming, right? And it finally made us move. I think you'll see that move in crypto over the months and years. Uh, Interest rate sensitive areas like biotech and healthcare, I really like. Real assets, I like. Real assets, I like. And, probably, companies who can lay off and maintain their margins, a lot of those big cap companies, they'll
Uh,
probably be big winners here too. If they don't decrease productivity, but they can increase
Layoffs
profitability.
versus lack of hiring is a different philosophy, by the way.
Yeah.
I don't foresee massive layoffs happening. Not when corporations can figure out better ways to offset that. So again, it's not that I see like massive layoffs coming here, Mark. It's a slow build out where they just don't rehire.
Yeah, no. And so like if you got a consumer facing stock that breaks support, I don't know if I want anything to do with that. I think those are good bearish trades. And I think there's a lot of areas that are ways to make some bucks in this, right? Because I think part of the reason we spend
Well,
the time.
let's take a step back because you're just getting into all this sector rotation models right now about what you like on the defensive side of the equation. Um, to me, I'm not sure this is a massive market conversation, honestly. Um, it's not my reading that profit margins are going to take a step back because they don't have labor input. Like, doesn't that mean profit margins? If production
Oh, that's
maintains,
what I said a few minutes ago.
like if
I see.
production maintains and profit margins go up, doesn't market go up?
No, that's what I said a few minutes
So
ago. For
yeah,
most corporations,
I don't see that as a bearish argument for the market. I don't see the conversation we're having as a massively bearish conversation for the market.
I think it is massively
In
bearish for a
2020,
handful
it
of
would have been.
stocks.
In 2018, it would have been. In 2010, it would have been. In
This is a different one.
but this is different. This is a different environment altogether, in my opinion.
Like when you have to add the liquidity to the system, and once again, if you are right on your premise, the amount of liquidity that will be needed to add to the system, the natural profit margins for a lot of companies that will go up. Once again, if I'm a consumer facing stock, that's going to be a whole different ball game. But for a lot of other corporations,
Okay, but where does this conversation conclude with? Because I agree with you. To offset labor shortages, you're going to see an increase in the M2 rate. There's no doubt about that. But where does this conclude?
like
Like
if you're right,
if I'm right, where does it conclude? Where's the
it ends with universal basic income.
it ends with universal basic income. That's where the conversation concludes.
And it becomes a conversation of who pays for it. Do corporations pay for it?
Corporations pay for it.
And then we have a different conversations where maybe the taxation rates are higher, right? And that's a
Dividend
whole, but
tax.
I don't see that happening for years. I don't think there's,
Well, yeah, because UBI is not going to be a thing until the numbers justify UBI. Like like a 10% impact on AI disruption isn't going to be that. Like you're going to need to see a lot more. A bunch of college grads not being able to get hired isn't going to get America to embrace a UBI conversation. Seeing, certain groups at the lower end of the economic spectrum, that's not going to get Wall Street to get to where it needs to go. That's not going to get the government there. UBI is a 2030s conversation. It is not a 2020s conversation.
yeah, I think this is important. This is one of these premise conversations. When you first talked about AI a few years ago, I have more money in my life because of it, right? Because I
AI is
recognize,
bullish.
you
AI is
know,
very bullish for asset prices.
because and I recognize that in the conversations with you, the ones we did in the podcast. If this is the trend we're heading towards, right, that means that you're going to see earnings be pretty decent and you're going to see liquidity added to the system and you're going to see a few stocks like Chipotle Grill get hammered once the algos get consumer facing stocks that fall out of favor. You don't want any piece of those, right? And so it becomes a haves and have nots. Sounds like a good trading environment, right? Even if the economic ramifications are interesting to say the least.
Well, and again, I want to be very, very clear on something. Every bit of my opinion on the AI and what's happening on the labor side of the equation has absolutely nothing to do with my analysis on the S&P 500 technically.
Yeah, well, are we ever going to break out? Let's get to that of that asymmetrical triangle, right?
Yes, the answer is yes. Yeah, we
like
have to. We have to. It's getting very, 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 very tight.
it does not want to leave this little range. It's like it's very comfortable here. It feels good. It's got its blanket. It feels good.
I think the
Maybe
market is truly wanting a catalyst. Will PPI be it on Wednesday? Will CPI be it on Thursday? I'm not sure.
we got Fed next Wednesday.
What are they going to say that moves the needle?
It is an excuse for the algos to have fun, right?
I mean, I'm sure we'll do that was a terrible line, by the way. I'm sure we'll do a deep dive on all things Fed in the pod next week. But for this week, like, I'm already bored of the Fed. I kind of like we all know what they're going to do. The only equation is do they get 25 or do they get 50? And how scary do they get on labor? Like,
Yeah, well, let's we'll save that conversation for next week. But listen, Matt, let's get to stock it or drop it. I really enjoyed this backdrop. Once again, for me, like I am such, and I just referenced the AI trade from 2.5 years ago, where you laid out AI, what it was. We had several podcasts, our pro community. We had tons of conversations about it, and it set the stage for not a trade, but hundreds of trades over the last 2.5 years. This feels like a driving conversation to understand. You understand the world you're living in, man. When those charts behave well, they give me confidence to act upon the technicals I see. So, become a trader when you don't have a job. You're gonna have to become a trader, right?
yeah, that's true. That's true. That is true.
All right, stock it or drop it. I got a few names for you. Ready to play?
I had a trader. I was talking to him about UBI the other day, and they're like, "Oh, what are we going to do as traders?" I'm like, "Just means you have more money to trade with."
You just just grow that account now before it kicks in, bro. Grow that account now. I'm gonna start with
UBI does not equate to paying for everything in your life. That's not the UBI.
no, it does
I
not.
just
No,
wanted to be clear on that. Like
we're
UBI doesn't
not entering a
rely on money.
socialist paradise.
Yeah.
You're getting some Starbucks money and some Chipotle grill money. Maybe you can
You
help.
ain't getting Starbucks money with UBI. That ain't happening.
Oh yeah, that's
That ain't happening. That's not my analysis on UBI. UBI will be minimum basic standard living.
yeah. Broadcom, AVGO, earnings this past week. We're going to play stock it or drop it. Premise of the game is Matt stocks it if he likes it from some perspective. He can talk about it from any perspective he likes, long term, short term. He has a lot of liberty, or he can drop it, says like just doesn't interest him and anything. Broadcom came out, actually sent Nvidia and AMD down on Friday because Broadcom had a big, huge buyer. A lot of people speculate it was OpenAI. Wasn't stated though, but good earnings, big new buyer, big gap up, stock or drop at Broadcom, Matt.
Broadcom stock it on a tradable situation. It had a really good earnings day, but Mark, the earnings day wasn't based on like a raw amazing beat. They had a slight uptick in forward-looking guidance. On net, I would say Nvidia's earnings was I don't want to say infinitely better because Broadcom was very, very, very good. But in totality, Nvidia's was simply far superior in my estimation from a couple weeks ago. And so Broadcom here, gap up situation. Obviously, the trend is pretty special at this point. Beautiful weekly trend, beautiful long-term trend. Broadcom's fantastic. I'm not going to stay dropping on Broadcom. I'll just say stock it from a secondary tradable situation because I'm waiting on a correction on Nvidia, and I would love a correction on Nvidia. Like, give me a 5% correction on Nvidia. Nothing too damning, nothing too destructive. Just
Nice orderly pullback, kind of like you had on Netflix a few months about.
oh, that would be beautiful. That'd be beautiful.
It's nice, and these nice orderly
Nvidia
corrections.
should be one of those ones you target on a correction, in my estimation.
Yeah, absolutely. Gotta those chip selling is not going away anytime soon.
No, it is.
And the fantastic thing about the chips is they keep coming up with new models, and you have to buy the new ones to keep up. And it's just going to keep going and keep going and keep going. These companies are going higher over time.
Yeah.
Let's go to the other side of the spectrum here. Let's go to Chewy. Got an upgrade from a couple banks in the last week, right? based on financial results. Chewy, the pet retailer, like, online retail, pets, right? Interesting pattern, right? On the pullback to the breakout zone, stock it or drop it, Chewy.
I, I would have to give this some thought after earnings, not in front of earnings, quite frankly. You know how much I anchor on earnings analysis, and that is this week. When you're looking at Chewy's going into earnings, we're talking about some lofty valuations, 55 forward P ratio, 45 on the normal P ratio. You got to justify that. So in front of earnings, slight overextension on the valuation conversation with tippity top. Maybe you squeeze 48 out of this juice. I'm going to say drop it.
Yeah, I love your analysis there. I mean, this is why I try to, a couple weeks ago, I brought a bunch that were too easy to not stock it. I tried to mix it up, make it more difficult this week, but I love that.
I like Chewy. I like,
Oh,
like,
we both love Chewy, the
I like
company.
Chewy as a company. I'm just like,
I love the space, I love the brand name, but valuation matters.
I don't
And
think you can expect above 48 in the current data set. So like I see it as a trader's conversation. You got earnings, so it's not a trader's conversation. Investors, that's high valuation to justify on a food-based company or a
yeah, give me the hood. After teasing them several times,
stock it 14 different ways.
after a tease is like, you're not getting in the S&P, you're not getting in the S&P. Oh, wait a
You're
second,
getting into the S&P.
we're gonna let you into the S&P today.
Um,
I believe officially the day they're joining the S&P is September 22nd.
22nd. Yeah.
Yeah, September 22nd, a couple weeks from now. But you got me an early stocking on this one.
Yeah, it's Hood. They justify it. Well done, Hood. Congratulations to Hood. AppLovin got in, by the way, as well. But congratulations, Robinhood. Well deserved, in my opinion. Um, Stock it. It's great. This is turning into a momentum building nightmare juggernaut. Obviously, valuation concerns, volatility concerns need to dial in secondary patterns here. But yeah, I'm gonna stock this one. Hood's got something going.
All right, UNH. Been a lot of drama. I've brought this up before, but the technical pattern, Matt, this one's kind of easy. This is a layup. I just wanted to talk this chart because I find it so pretty.
It was
So I'm
also
going to
my
drop
rapid
it,
fire
UNH.
pick. Coming into the week was United Health coming from the low point. I'm going to say stock it. I'll just say stock it from a
Because
position.
this is not, and you might think this is not a traditional map pattern. You usually need a little. I know you usually need a little more development on these things, but this one's caught your eye. Or did Buffett just
Well,
say?
Buffett influenced. Like that would be a lie to suggest Buffett did not influence. Buffett certainly did influence. So did David Tepper. But to me, this is a very compelling technical conversation. Yeah, I mean, you're right that it's not a traditional reversal, but you got it as a little bit of a head and shoulders. And the time correction allowed that 20 period moving average to converge against the breakout channel, which when you can get the breakout to be clean, clean versus dirty, I'll take clean all day long. This is clean now. 2 weeks ago, it was dirty. You had that 20 on top of it. Now it's clean. Breakout occurred. It's a stock it on a position trade for me.
uh, Google or Meta. Google, took a big. It was called Google Day, right? Like the market had like sold off, and then it had a big rally overnight because federal courts now only release rulings after the market closes, apparently. But they ruled that Alphabet can keep its Chrome browser. If you could only stock one, Meta or Google, which would it be and why?
Mhm. Long term, I'm assuming this is long term.
Yes, long term.
I'd stock Google over Meta long term.
I think I would too.
Yeah.
I think I would too. I
It's
think,
got cheaper valuation.
and
Uh,
that's
Google's the lowest valued Mag 7 company from a pure valuation perspective. And really the only flaw in Google, like fundamentally, has been that court case hanging over its head. And they had a pretty positive ruling last week. They get to keep Google, they get to keep search. They're
and
not
Matt, that's been over the head for a while now,
like
right?
they Apple can still use their products for 2 years, Mark. Like we're not talking months here. That's been a dark cloud on Google for a long time. And even knowing that Google was on the tackle 25 this year, Meta was not. I'll have to say Google. I think the valuation argument on Google, long-term projections on Google, you're talking about a hyperscaler on Google the same way you are with Meta. Um, Plus, I didn't love Mark Zuckerberg lying about 600 billion in capex spending over the next 3 years when he was at the White House the other day. Hey, Zuck, don't lie when we can see everything you're doing in your earnings. Like that pissed me off, quite frankly. Like, just to say that because you're at the dinner and it looks good on a headline. Like,
Yep.
come on.
Zuck loves money, loves headlines.
Mark, do you know what that means? That means Zuck's spending $300 billion in 27 on capex. Like, really? Really? Do we really think Zuck's spending 300 billion in 27 alone? Because we know what their capex spending is.
Listen, when you go to the White House, a zero gets added or two to.
I understand it. I get it. I'm still going to say it's nonsense. I'm still going to say, as a market participant, we don't need nonsense. We want truth in numbers. We don't need hype and bullshit. Like, I get it. People love that stuff. They love posting that stuff on Twitter. They love snapping it, snipping it, and be like, "Ooh, 600 billion coming in." It's like, guys, I read these reports. I study this stuff. I look at this stuff all day long. Mark Zuckerberg's not putting in $600 billion in capex spending. It's not happening. It's not happening. It's not, it's a fairy tale. It's fake. It's nothing. It's literally less than nothing. Like, just say the truth. You're going to spend around 300 billion in capex. Why isn't that number good enough, by the way? Like, that's a massive number. Like, if Zuck were to say we're spending 300 billion in hyperscale build out, I'd be like, that's right, baby. That's a good number. 600 billion, it's just outlandish. It's nonsense. It's like, instead of me clapping saying, "Oh man, that's a great number," it's me being like, "You're an idiot." No, you're on mute.
Zuck muted me. Last one, CRM, tough one.
By the way, was I the only one that was kind of just sitting back going, why is the tech oligarchs kissing nonstop ass? Like, was I the only guy in America?
I just
This is
assume that
nonsense.
that's the standard way of operating these days. So,
Nothing standard about that in the year of our Lord 25 in America.
no, I think there is something standard. Got to kiss the ring, bro. Got to kiss the ring.
I don't kiss rings.
CRM. You like support holding here? I kind of do. Stock.
Technically, I could be influenced here. I thought their earnings was far better than what their gap down was. But no, I'll have to say drop it. Like,
This is a
CRM's got to
tough one.
prove it out. They got to prove it out. CRM, there's something going on here because, yeah, would I agree with you, Mark? Absolutely. Do I see an edge above 262? Absolutely, I do. But that's a trader's conversation, not an investor conversation. There's a flaw in the design of this company somewhere, somehow. It cannot get going. It's one of the worst producing software companies this year, and it should be one of the better ones. I don't like anything about it. I see the technical edge, but
too many good.
fundamentally, I got concerns.
All right. I got three questions. Coach's our final segment. This one came in. We talked about this a little bit in the first
Tim
section.
Cook should not say thank you 8 different times in a 2-minute stretch.
Are you talking about Zuck still?
Is that a radical take? No, Tim Cook at that dinner last week, Tim Cook said thank you 8 times in 2 minutes.
Dude, this is the world we live in. The super rich want to stay super rich. And so they are going to kiss the ring.
That's fine.
Or else they'll get punished. That's the world we live in.
Okay.
Shouldn't be the world we live in. Shouldn't.
I'm sorry. I'm not going to accept that.
You shouldn't fear punitive actions from those in charge. That's the world we live in.
America. I'm not going to accept that. No.
So it's a different America, bro.
I lost a lot of respect for those tech dudes. I lost a lot of respect for those tech dudes that day. Like, I get it. Kiss the ring. You got to do what you got to do. But I would think somebody with the 200 billion arsenal in reserves would not have to kiss ass constantly. I would think, but here we are.
Big Brother
Again,
can come take it
I'm not
all
saying
away.
anything about the Trump administration. I'm saying specifically to those tech oligarchs. I'm specifically to those dudes.
Yeah, I think this rubs you more than me. Maybe I'm just
Oh, you
more
don't want
dead
to touch
inside.
this conversation. You're begging to move on. You're like, Matt,
I'm just dead inside on it. I'm just dead. It doesn't surprise. I think you hold them to a higher standard than I do. It doesn't surprise me at all that they do this. They like money. That's all they care about.
I hold all leaders to a very high standard. Yes.
You know, you do. You're far more of an idealist. I've got more sympathy.
Just
Uh, but Coach's Corner. All right. So this was one that came in,
I'll be
and
crazy,
this,
but I think we should hold our political leaders to the highest standard.
you know, we don't,
No, we do not.
nor will we anytime soon.
No, we won't. All right, I'll stop it. I'll stop.
It's become a disgusting cesspool of
I'll stop.
what it's become, but it's what it is, right? It's what it is. Don't change me from selling bull put spreads today on UNA. So,
No, one crew is going to push the markets higher over time.
Longer is going to push the markets higher. They want higher asset prices.
All right, so we're dropping Salesforce. What's the next?
All right, okay, next is Coach's Corner.
Oh.
And this was a question I had, and we touched about on this, but it was a conversation I was having with a real life individual where they were talking about AI related jobs in their industry. And they were saying, like, listen, I'm seeing this trend start in my industry. I'm seeing this trend start in my company. The individual works for a software company. And they asked, is this bullish for my company? And he didn't give the name, like as far as that. And is this a trend we can expect to continue? So of the two.
Is the question, is AI adoption bullish for the company?
Yes, for that company that was adopting AI, laying off individuals.
Any company adopting AI is there's an efficiency argument there. And the efficiency argument means as you reduce your biggest cost, which is labor, you impact your biggest reason people love your stock, which is profit margin. For example, why do people love NVIDIA? Why are they the AI king, queen, and country? Because they have a 75% profit margin. That's why. If their profit margin goes down to 68%, they're still the king, queen, and country of all things AI. They're still one of the most important companies in the history of mankind, but they're not going to be going up nearly as much. And so, yeah, of course, AI adoption efficiency reduces labor market, which reduces the highest input cost on your profit margin. It's a bullish conversation, no doubt about that.
Yeah, no, and I would
How do you
ask
think
him,
every corporation is embracing AI efficiencies?
I should have asked him, is your CEO going to the White House to kiss the ring? Because that will really.
No, you got to be a tech oligarch for that.
You got
to be Tim Cook to do that.
What's the cutoff to get invited to the White House to sell your soul? Like what company? Does Benioff get invited? Benioff gets invited, right?
No,
he's not big enough.
You got to have social reach. Benioff doesn't have any social reach. So no, you got to have social reach. By the way, Elon was invited to that same meeting. Elon said no.
Yeah, I love Elon.
I do like Elon too.
Elon would not say yes 8 times.
Elon would have said yes if Sam Altman wasn't there. Although I would, Howard. Never mind. Move on.
All right. Next one. I've heard rate cuts.
Was that the only question though? Is AI adoption?
Well, and they also asked if the trend was going to continue. That they're seeing. We talked on that. Is the trend of layoffs going to continue within their industry if it started now, or is it kind of a one-off? Is what they were asking.
If I was an entry level, just got hired on an entry level job at a company, and they said we're going to embrace AI, I would fire myself immediately.
Like it feels like if you're at the beginning of a trend, that's the trend.
Yeah, exactly.
Like
we just had a breakout out of a multiple time frame situation. Yes, AI is absolutely bullish for the company, and it's bearish for you as an individual.
And this is kind of my general take on our whole conversation, right? Like it's kind of bullish for a lot of assets, for different reasons. Could be bearish for individuals. Be just interesting to see how this plays out from a political, socio.
I don't know how anything. Like when the steam engine came in, Mark, it was bullish for it was bullish for the corporations, and it was bearish for people who built steam engines.
Yeah.
Like this has been a conversation we've had with the advent of technology throughout human history. It's no
It's
different.
just the next leg of that.
Yeah, and it's just yeah, exactly.
So, all right. Next question. I've heard rate cuts are good for the market, except when they lead to a recession. That's factually accurate, right? We've seen that if a recession comes, historically, rate cuts are not good, but if one's not. And then their real question following that statement was, does it feel like a recession is coming after last week's economic?
No. Like well, at time though. I mean, yeah, of course we're gonna have
6 months, 9 months, any time that matters.
I don't see a recession this year. It's hard, Mark, because depending on your industry, you could argue you've been in a recession for 5 years, like depending on certain industries. And so I'm sure there's interest industries right now that are having the net impact of a recession, Phil. Of course, there was an argument made a couple of years ago, and I embraced it a little bit of the concept of a rolling recession, where it was kind of like sector rotation a little bit. This area of the market, this area of the economy would be going through some difficulties, and then it would rotate, and it would rotate, and it would rotate. So is that just a way people are describing environment of stagflation? I would argue yes. Stagflation has a very similar feel to a recession to the end user, because at the end of the day, the end user just looks at where the money's going, and where the money's going is it all gets taken out by your average bills on a monthly basis. And so I don't know if we're staring down the barrel of a recession in the next 6 months. Is there obvious some areas of the market that have recession-like impact? Yeah, I would certainly argue that. But are we going to get in a full-blown recession where we get negative GDP to contract 2 consecutive quarters? I think Scott Bessent would throw the
Yeah,
kitchen
I don't think that's going to happen.
at that. Like they will risk hyperinflation before they risk uh, a labor implosion in a short time period that sparked consumer, fear across the board. I think they'd throw money at the problem. And you're already starting to see that, by the way. You're already starting to see the Fed entertain a 0.50 cut instead of a 0.25. You're already starting to see Fed fund projections go all the way down to 3% by the end of this year. And that's before we get into quantitative easing and what the central banks does without the actual headlines. So, no, I don't.
I
If
mean,
I had
once
to
Trump
say,
gains control of the Fed, he is going to flood the system. Like he just is.
I don't think there's any debate on that. I don't think the
Yeah,
the
it
the
is not a
strongest.
controversial statement. I just
No, I was just going to say, I don't like the strongest MAGA people, the strongest Trump administration people. They all know that's happening.
yeah, and there might be
The,
economic
the
problems, but
president has been arguing for a 300 basis point cut for 6 months.
yeah, no, I mean recession's not
You
one
know
of them
what's
in my
coming.
opinion either. Like
And so I agree with you. I don't think recession is the word. I think stagflation is the word.
I think the gold and Bitcoin are a benefit of what's coming.
I would agree. Yes. Yeah.
Yeah, the anti-fiat plays. The
Yes. Yes.
anti-fiat.
Aren't alternative assets the winner of a stagflation?
Real assets, alternative assets. I think they are the huge winner of this
Yeah,
political regime.
I agree.
Right? So not Chipotle Mexican grill.
Probably not Chipotle Mexican Grill. Speaking of which, I'm gonna go get me a burrito today just to help
I
that.
am
You know,
the chances of me
and
getting a burrito have went up
I'm
dramatically
gonna go get
in the
me a
last
burrito.
hour.
I'm gonna get a nice little burrito today. Help
All
them
right,
out.
this
They
is
look like
another
a struggling company right now.
this was another real life question I had in a conversation with someone where they were talking about problems they were having in acting. How do you push past fear when it feels paralyzing? They chose that, especially when taking risk in your trading.
Well, that ain't a trader's conversation. That's a psychological conversation. What I would suggest is let's go back to Warren Buffett. Fear manifests itself in the unknown. And Warren Buffett had a great comment, great quote many years ago when he was talking about terrible things to the economy. And he said, and I'm paraphrasing, of course, all kinds of things can happen, right? You could have the dollar go down, you could have a recession, you could have layoffs, you could have hyperinflation, you could have all this negativity. And that's where fear resides, in that unknown of the negativity. There's a lot of people that fear, quite frankly, there's a lot of people that fear the conversation we had today in AI replacing jobs, right? That's a fearful conversation. And I totally understand. I'm not trying to disrespect it in any capacity. Totally understand it. But why do you not have that fear? Why do I not have that fear?
It's just knowledge. Like you
It-
have
we
this
know where
knowledge.
the environment's going, and we want to make sure that we're going to be our best self in that environment, right? So we work towards that. Knowledge replaces fear. Knowledge is the new currency. Knowledge replaces that doubt. Knowledge replaces that fear. And so if you're paralyzed because of the concern of something that may or may not happen in the future, realize those variables have existed at every point in human history, and 99.9999% of the time they don't play out. Doesn't mean we shouldn't be prepared. The old Boy Scout motto, be prepared, certainly believe in that. But at the end of the day, Mark, it's not that I don't believe bad things can't happen. Of course, bad things can happen. They obviously can happen. Buffett said it, bad things can happen. You can have all kinds of things happen: recession, devaluation. Hell, Mark, you could have the death of the currency in our lifetimes. That is a scenario that I don't believe is a high likelihood. But I'm
That
going
could
to tell
happen.
you, but I'm going to tell you right now, if the dollar died and they issued a new currency, I would not be shocked in the next 50 years. That would not shock me, and yet it would be one of the most scary things in the history of mankind. But I wouldn't be scared. And it's not because it wouldn't be hurtful. Everybody would be hurt in that. Everybody would be hurt in that. It's just that knowledge replaces that fear. You put actions in, you put plans in, you start to do things to protect yourself, your family, your legacy, your heritage. And so, what I would say, and I know it's an easy answer for us, but it's also a very truthful response. If you live in fear and you live in that anxiety, and that anxiety is stopping you from doing the things you need to do to make sure you're protected against the things you're scared of. And I'll even do you one better: not only protected, but thrive in the environments that you are fearful of. We'll replace that with knowledge. There was an old book called Prospect Theory. And prospect theory is basically a study of how humans behave over certain things, over when we win things versus when we lose things. And at the end of the day, Mark, what prospect theory states is, in times of crisis, in times of uncertainty, where fear lives, right? Would you agree
Mhm.
with that? Fear
Oh, of
lives in
course.
uncertainty and crisis, right? Well, we all behave at our base instincts, which are based on our base levels of understanding. For example, Mark, if a guy with a gun breaks into your house and you have no self defense understanding, you have none of that, what is your most likely response? Cower. That's
Yeah, like
that's your most
hide
likely response. You psychologically won't even recognize you're doing it, but you will do it. You will cower.
because you don't know how to act
You
in
don't
the
know how to act.
situation. And
And so
you
your
hadn't thought
instinct,
through the plan. I'm just trying to
yeah,
put myself
you
in that
go you go
situation.
motionless. You go motionless. And I don't say that through any judgment at all, right? We all behave at our base instinct. But Mark, if somebody on SEAL Team 6, if he's hanging out in his house and some guy with a gun breaks in, what does this SEAL Team 6 dude do?
Probably stand behind a door and execute
I
his
I
act.
I like his ability, his or her
Yeah, stand
ability,
behind the door,
his
take
family,
out the invader when he crosses the
right?
corner, right?
Because of knowledge. He has
Knowledge training.
skill. And again, you don't even go through the thought process. You just instantly act. It's an instinct. But that instinct, if you understand prospect theory, that instinct is based on skill. That instinct is based on knowledge. And so if you're so scared of the financial world because of how you have how it's how it how you have behaved and dealt with that environment, or because you have some negativity in your life because of the financial world, or because your dad lost his job due to the subprime meltdown, and your family lost 50% of their 401k, and your father can never retire, and he died on the job site. We all have stories like that, Mark. Our father passed away in his early 70s, and he was still working. He was still working in his early 70s. And I'm willing to bet if that man didn't get beat up in the pandemic, didn't get beat up in the subprime meltdown, I'm willing to bet that he might have had a different take on that. And so things like these conversations on the psychological level can go pretty deep. But in my estimation, knowledge overcomes doubt. Knowledge overcomes fear. It's not money that is the answer. It's really not. It's knowledge. And so, if what you seek is knowledge, then sit your butt in the seat and go through the process of acquiring the number one skill set you need to, and that is knowledge.
Well said, brother. Send us out. It's been a great podcast. This is one I'm going to reference for a long time to come.
I'm sure we'll have part two of the AI adoption of all things labor at some point. Mark, really appreciate the podcast. Really enjoy doing the podcast each and every Monday with you. Team, if you love the podcast, best way to support the podcast, give us a nice little like and share. Tell somebody about it and help us spread the good word of the Trading Justice podcast into the eyes and ears of all listeners out there. First and foremost, let me just thank the listeners and the viewers of the Trading Justice podcast. You guys are the absolute best. We love you guys, and I hope you guys have a wonderful, wonderful week. Secondarily, we have Master Trader coming up next Monday, next Tuesday, for the pros of tackle trading. And if you are not a pro of tackle trading yet, you are missing out on the best trading community out there in America. Not only do we do application stuff every single day, we sit in the Traders Lounge, we talk about the markets, we talk about trades, we evaluate your trades, we evaluate you have a question on a trade, you go ask my girl Linda. Linda, what's up, Linda? It's good to see you in the pod. Linda came to us the last week. She had a trade on Google, Mark, and she was like, "What are we going to do? What are we going to do? What am I going to do? What am I going to do? What am I going to do on Google?" Linda came to the Traders Lounge last week, and Coach Frank and myself were breaking Google down the day before the court case was announced. And both Coach Frank and I said, "You got to stay in the trade." Why do you got to stay in the trade? You got to stay in the trade because it's still above the 9 EMA. You have concern, you have fear, you have doubt, but it's still above the 9 EMA. You still have an edge. And I believe what Coach Frank and myself said was, you got to give this a day. And that next day, boom, 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 boom. Nailed it, home run.
This is true story. I was there.
Every trader, so was 45 other people. Every trader has questions that they go through every single day. And sometimes, like going to a doctor, Mark, you go to a doctor, you get some advice, you may not love it, you may like it, whatever. If you don't love it, you go get a second opinion. Well, you as a trader, everybody at Tackle Trading is a heck of a trader. They're doing amazing things, but every now and then we just want to get a second read. We just want to get get a second opinion to a certain extent. And that's what Linda did on that day in the Traders Lounge. So whether it's the Traders Lounge or whether it's the Coaches Show where I'm doing a 4-week mini class on day trading, or whether it's Master Trader next Monday and Tuesday, there is not a community in America that will do what we do on a day in and day out basis from an application and an education perspective with our entire community. We eat, sleep, and breathe it. And if you want that high quality from an education perspective, the best education in the market, tackle trading. Application, best application, tackle trading. You want to be part of a community? Come join us at Tackle Trading. You'll love it, you'll stick, and you'll be an amazing trader for a very long time. And it starts next week with Master Trader. So hit the link in the description below, sign up for a free trial of the pro membership, and join me in Master Trader next Monday and Tuesday, and let's start that on fire. And with that said, I hope everybody has a wonderful, wonderful week. Thank you so much for supporting the Trading Justice podcast. And with that said, enjoy the rest of your day as well.
Have a great day, everyone.
Later.